Hey everybody, welcome to our YouTube channel. My name is Glenn Tompkins, Senior Instructor here at VectorVest. I've got another video for you. So, you know I've been talking about Castor Maritime time and time again. So, I wanted to do an update video to see what's going on. If you want to know what's going on with CTRM, you sit right there. Hi everybody, Glenn Tompkins, Senior Instructor here at VectorVest. Always love bringing these videos to your attention, and this is a video that we've talked about, or a stock that we've talked about time and time again, and you know, there may be mixed feelings on the stock. So, before we get into it, if you're brand new to the channel, make sure you hit the subscribe button, hit the bell icon, and by all means, if you like the content, hit that like button. Let everybody out there in YouTube land know what's going on here at VectorVest. So, as we get into CTRM, you know that I like the stock. It's a low dollar stock, but it's been a tough stock to sit in. It is definitely a growth stock, and I'm going to explain to you why I believe it's a good growth stock. But along with that growth, you're going to give up some volatility, and there's going to be times to be in the stock and times not to be in the stock. You got to know when to hold them, when to fold them, when to walk away, and when to run. That's right. You never count your money while you're sitting at the table. There'll be time enough for counting when the dealing's done. All right, let's go take a look at the stock. So the first thing I want to look at is the Baltic Exchange Dry Index. It gives us an understanding of how much these ships can pay or get paid to ship products across the world. Now, understanding what's going on with COVID-19, the Delta variant, a lot of different things, but as we slowly but surely, if you want to look at it this way, start to put COVID behind us, countries around the world are going to need to import goods. What's the easiest way to do so? By ship. The shipping industry, transportation ship industry, has definitely been rising, and every company, for the most part, in that industry has had the benefit of rising because the industry as a whole is rising. Birds of a feather flock together. If the industry is rising, the stocks within the industry are rising as well. So if you look at this, the Baltic Exchange Dry Index, the rates at which these ships can charge to ship product is definitely going higher. Over the last year or so, the Baltic Dry Index is up 203%, along with other indexes along to tell you how this space is faring as far as what they can charge. Another one, EU carbon permits up 128%. Across the board, these companies are making money. So you know me, I like CTRM, and again, we can differ in opinions, but I still think that the stock is a good long-term play overall. So let's go take a look. I'm at the website, Castor Maritime, press releases. This is one of the biggest reasons why I like the stock. The company continues to add more ships to the fleet, and it's a low dollar stock ramping up so that when this industry and more people start to get goods coming in, this company is poised to do extremely well. Now, there's a couple of things going on with supply and a lack of supply, or with the backups at ports, and there's a lot of ships that are sitting and waiting, and inventory is just waiting, and the scheduling is all off whack. There's a lot of things that's holding these companies back, but because of that BDI, that bulk dry index is going up, when they do get a shipment, they charge a lot of money and it adds to the bottom line. All right, so I'm looking at the most recent ship acquisition, October 7th of 2021, September 22nd, September 13th, August. And right now, if you look at them, the most recent one, they picked up on October 7th of 2021. What did they get? They got 3 ships. They got a Magic Orion, Magic Eclipse, 2011, 2006. And something is out there. People say, well, these ships are old. I did a story that talked about the longevity of these ships in one of my CTRM videos. If you didn't watch it, go back, take a look, and it gives a good description of how long these ships should last. And I think Castor Maritime is doing the best that they can to get the best ships that they can to ship out when it comes time to ship product. All right, so right now they have a fleet of 27 vessels, 27 vessels. So they are definitely growing the fleet. How are they doing that? And a lot of people will tell you that they're diluting their shares or that they're doing a reverse split. There's a lot of things going on behind the scenes, but I think that in dilution of shares or selling a lot of shares to take in money, what are they doing with that? They're bringing down their debt. And a lot of the ships that they're buying straight cash because they've already sold shares to get the money to buy the ships. So yes, they're trying to bring down the debt so that as a small company, they're not carrying a lot of debt. But the dilution of shares as a retail investor, it does make us feel a little different. I own the stock personally because, I own the stock. The dilution, I get less shares. The dollar values are going down. It's just tough. But let's get into the software. All right, let's get into the software and let's talk about the stock itself. All right, so here's CTRM, currently up today about 1.3%. Nice little move on a stock. It's trading at $2.53 with a value of $3.40. This is a low dollar stock that is undervalued, and our mantra is to have you in safe undervalued stocks that are rising in price in a rising market. Now, the stock altogether is not that safe, but it's got good upside. The stock's got a relative value, which looks at the stock's long-term price appreciation potential as compared to a AAA corporate bond. This stock should outperform that AAA corporate bond by 44% over the next 1 to 3 years. Low dollar stock that's undervalued, good upside. This definitely is the epitome of a growth stock. Now with that, relative safety is an indicator of risk for the stock. This stock, in order to be in it, you've got to be able to give up a little bit of safety, which tells me that this stock is going to be a little bit more volatile. And if that's not what you want, then this is not a stock that you want. But growth stocks tend to either pop right away and make some money and then pull back, or it may take a little bit of time for the stock to pop. But again, with a relative value of 1.44, the stock's got great upside. The stock is currently in an uptrend at 1.12. The stock is above the value of 1 on RT or relative timing, telling me that the stock is in an uptrend. Something else that I still like about the stock, positive earnings, 32 cents per share, and they're growing their earnings at a clip of 32% a year. Double-digit earnings growth. Now, earnings is the engine that drives the stock's price higher. If they've got positive earnings and they're growing it, that again gives me a good sensibility feeling that this is a good growth stock. With that safety, though, below the value of 1, I am going to give up some safety, and I'm going to be in a little bit more of a volatile stock. I'm going to right-click. Let's go view the stock graph. Give us some more detailed information. So because I've done videos on this stock, I've got a lot of drawings on here. The stock is currently bouncing off a level of support, sitting at the value of $2.20. Nice hammer formation that occurred here on 10-6, about 5 days ago. Little bounce. Let's see if the stock can bounce off this level of support. Currently trading below the 20 exponential moving average on an end-of-day basis. Would like to see the stock's price bounce above that. With today's candle, nice big wick at the top, which means I've got a little bit of selling pressure. But look at that earnings per share. Look at that earnings growth. And here's that RT. Tells me that overall, even though the stock looks like it's consolidating, it's still in an uptrend. I've got a price target on this stock sitting at $4.50 still. I like that the price, even from this level of support, is higher than it was before. Trending higher. RT is above 1. Volume is pretty steady. It's not above average volume, but it's pretty steady. I own the stock again. It's been a tough stock to sit through. I totally understand. But as a growth play, giving up a little bit of safety, this is what's to be expected. I like the run there. That was a tough time. I sat through that too. I like the nice little run up. Let's go see if the stock can take out that 20-day exponential moving average. So with that, folks, the video is done. This has just been an update on CTRM. I still like the stock long term. I explained to you it is undervalued. It's a low dollar stock. It's got great upside potential. It's got positive earnings. It's got good earnings growth rate. Everything shows me that it's got a recipe to go higher. You just got to know when to be in it and when to not be in it. But the stock's got great upside. So That's a good follow-up to what's going on with the stock. This video is over. I'd like to hear your comments on the stock. If you're in it and you're taking a loss, or you just recently got into it and you like it, let me know what you think about the stock, because it's important to me, and I will respond to your comments as well. If you like what you saw here, again, folks, don't forget to hit the like button. So until the next time, folks, see ya.